This is Vee Trades, and today I'll be doing a technical analysis breakdown for Tesla. Tesla is all about sustainable energy and has created electric cars along with renewable energy sources for homes and businesses. Before we begin, please take a second to give the video a like and subscribe for more chart analysis. Also, thank you to those who have already subscribed and liked my videos. It means a lot. Just a reminder that I have no positions in this company, so I'll give an unbiased viewpoint. We will start out the technical analysis by going over what I see in the daily chart and potential price targets. Then we'll wrap it up by looking over the long-term pattern on the weekly chart. So here we have the daily chart, and the first thing that pops out to me is that we are moving sideways in a range. As you can see here previously, the price was in an uptrend, making higher highs and higher lows. I'll go ahead and show you that in a channel form. And all these lines do is just make it pop out more. Make the price action pop out and make it visible. So we were in this uptrend, and then we stalled out at this 880 level before going in a downtrend, as you can see here. And then now we're just moving sideways. We're moving sideways because we're finding resistance and support at these two levels. So we're finding resistance at about the $700 level. I would say it's about right here, probably the 710 level, and then we're finding support at this 568 level. So if price were to break out of the range, so basically short term, I do see the market pulling back all the way to this 572 level. That's what it looks like. That's what price does in a range. It moves up and down. As you can see here, we came here, moved down, we broke out, and then we fell back in the range, found support, tested the lows again, moved all the way to the highs again. So it just undulates back and forth within the range. Now price can't do that forever, so sooner or later it's going to break out. So I think it's going to break out to the low side because we did not make a new low of this previous downtrend. Usually price tries to make a new extreme of the trend before reversing. So if we were to do that, the price target I have for Tesla, first it's going to come over here, this 570 level most likely, but if it does break out to the lows, it's going to go to the 435 level, and it makes sense because there's a huge gap over here that was not filled. So I could see it come right there. And another reason I see it coming to that the 435 level is because we have another measured move that shows it's pointing right there. So again, we have confluence, so we have two measured moves right at this target, so there's a high probability that price will try to reach it. Just to show you guys that the market respects these legs or measured moves, so we had the first leg right here, and then the second leg was right here at the lows of the new trend. And then price went right to it before selling off at the 773 level. And usually if we have one leg down and then two legs up, and we're gonna get the same leg down of the first leg. Now it's the same thing in reverse for an uptrend. If we had one leg up and then two legs down, we'll have another leg the size of the first larger leg up. So let's go ahead and take a look at the weekly chart now to see the long-term pattern. So before in my analysis, I thought we would continue higher. However, the bias change, and then we have to change with it, because if we just ignore it, then that's how you lose money, because the market's always right. You don't want to fight the big guys. They have a lot of money and they can just move the market wherever they want. So my analysis was, after we'd have a break of this channel, this uptrend channel, we would go straight up to test the highs. However, we found resistance right here. So there's a new pattern in play before we go up to make the new high. So this pattern has to play out before we eventually go up to that 900 level to even the $1,000 level. So that's what this shows me, the weekly chart. Price was in this uptrend, and then we had a break, and then we came back to test it once and then twice. And usually the market moves in two, so if it does something twice and it fails, it's just going to do the opposite. The weekly chart also shows this little breakout that we had of the little range. I'll show you right here. I'll make it a different color so you guys can see it better. Let's make it blue. So this blue range, price broke out of it, and it tried to come back to test it many times. because like I said before, price likes to test breakouts at least 90% of the time. There's a lot of orders left over here, a lot of buy orders. So once it triggers, we'll probably see a bounce right around this 456 level. And if price were to retrace back to this level, that's about a 30%, 31% drop. Now, if it does find support one more time at the lows of the range, that would be a double test this low. So if it try to go down twice and it fails, it's probably going to go back up. So if it does go back to this low, that's a 12% drop. And if it does find support there, like I said, we could see this measure move up, the size of the range, and we could see it easily go to the 850 level, but most likely it's probably going to make that new high around the 910 level. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel since you might be surprised on what you could learn. Leave a comment down below on where you think prices are headed and what you took away from the video. Lastly, I appreciate any feedback to help improve the channel since I want to deliver great content to you guys. See you next time. Bye.